Frank is 72, retired machinist, 41 years, Dayton, Ohio. Lost his wife 3 years ago. Last January, his bank finally offered him a decent rate, 4%, so he moved his life savings, $155,000, into a CD. He never spent a penny of it, never even withdrew the interest. This spring, Frank opened his tax return and found a bill for around $1,400. The year before, he owed zero. Same Social Security check, same quiet life. The only thing that changed was where his savings sat. Here's what nobody told Frank. There is a line, $25,000 of what the IRS calls combined income for a single person, $32,000 for a married couple, and once your savings interest pushes you over it, that interest gets taxed twice. Once as interest. And again, because every dollar of it can drag up to 85 cents of your own Social Security onto your tax return with it. Up to 40 cents of tax on every single dollar your savings earns. The law says nobody has to tell you. Not the bank, not Social Security, not the IRS. You have to know the line, and in this video, I'll show you how to find yours, to the dollar. In the next few minutes, I'm going to show you 3 things. First, the 3 kinds of money the IRS counts against you that almost nobody expects, including interest you never touched, and 1 kind of income that's supposed to be tax-free. Second, later in this video, I'm going to show you a single checkbox that erases your threshold entirely, drops it to 0. If you're married, you especially cannot miss it. And third, at the very end, the exact sentence to say to your bank, word for word, and the 1 government form that makes sure April never ambushes you again. Nothing here needs a lawyer, an advisor, or a fee, just knowledge and 1 phone call. Right now, you may be thinking one of 4 things. Let me save you the trouble. 1. I'm not rich. This isn't me. The line is $25,000, and half your Social Security counts toward it. The average check in 2026 is about $2,071 a month. Half of that gets you most of the way to the line before your savings earns a dime. 2. My bank would have said something. The bank did say something to the IRS. It's called Form 1099 INT, and it reports your interest automatically every year. Telling you what that does to your Social Security is nobody's job, so nobody does it. 3. I heard the new law ended taxes on Social Security. It did not. It added a deduction, a good one. I'll show you how to grab it. But the worksheet that taxes your benefits was not changed by 1 comma. 4. Too late. I already own the CDs. It is not too late. There are 2 fixes that still work this year, and they're both in this video. And if you think I'm exaggerating, the Congressional Research Service, Congress's own research arm, reports that about half of all Social Security beneficiaries now pay federal income tax on part of their benefits. When this started in 1984, it was supposed to touch about 1 in 10, half. That drift wasn't an accident. Stay with me and I'll show you the machine that did it. Pen and paper out. This is the whole machine, and it's 3 lines long. The IRS adds up what it calls your combined income. Line 1, your other income, pension, IRA withdrawals, and yes, every dollar of bank interest. Line 2, your tax-exempt interest. Write that down and circle it. The tax-free municipal bond interest your broker sold you, it gets added back in. On this worksheet, tax-free counts. Line 3, 1/2 of your Social Security benefits. Add those 3 lines. If you're single and the total passes $25,000, part of your benefits becomes taxable. Past $34,000, up to 85% of them can be. Married, filing jointly, the lines are $32,000 and $44,000. Now the part almost nobody knows. Those lines were set in 1983 and 1993. They have never been adjusted for inflation, not once in over 40 years. Your benefits get a cost of living raise, 2.8% this year. The lines don't move. Every raise walks you closer to a line that was drawn when gas was $1 a gallon. They know. They are not required to fix it, so they don't. Let me show you what this does with real numbers. Math on screen. Ruth, single, 69. Social Security, $24,000 a year. Half counts, that's $12,000. Small pension, $20,000. and $45,000 in CDs at 4%, $1,800 of interest. Her combined income, $33,800. That $1,800 of interest doesn't just get taxed itself. In her range, generally every dollar over the line drags 50 cents of her benefits onto the return. So her $1,800 of interest puts roughly $900 more of her own Social Security on the tax return. $2,700 of taxable income from $1,800 of earnings. In the 12% bracket, that's about $324 of tax. On a 4% CD, that's an effective tax of 18%. Her dollar, taxed coming and going. Now Earl and Dot, married, $42,000 a year in benefits. Half is $21,000. $25,000 from IRA withdrawals, and $155,000 in savings at 4%, $6,200 of interest. Combined income, $52,200. That's past $44,000, the upper line, the 85% zone. Up here, generally every dollar of interest drags 85 cents of benefits with it. Their $6,200 of interest becomes $11,470 of taxable income. In the 22% bracket, $2,523. That is 40.7 cents of tax on every dollar their savings earned. There's your title. Taxed twice isn't a figure of speech. It's the worksheet doing exactly what it was built to do. Write this down because here's the trap inside the trap. This applies to CD interest you never withdrew. On most CDs longer than 1 year, the interest is generally reported to the IRS every year whether you touch it or not. The money sat still, the tax bill didn't. So how much is too much to keep in savings? Here's your personal line, and it's one division problem. Take your threshold, 25,000 single, 32 married. Subtract half your Social Security. Subtract your pension and withdrawals. Whatever room is left, divide by your interest rate. At 4%, every $25,000 of savings throws off $1,000 of counted income. If you've got $5,000 of room, your savings line is around $125,000. If you've got no room left, every new CD dollar may be earning at 40 cents on the dollar against you. Single and thinking my numbers are smaller than Ruth's? Don't go anywhere. The next part is about the people the worksheet hits hardest, and it might be you. Quick checklist. You're in the crosshairs if you're a widow or widower filing single. Your threshold dropped from $32,000 to $25,000 the year after you lost your spouse, while your expenses didn't drop with it. You took your first IRA withdrawal this year. You finally moved money out of a checking account into a CD that actually pays. Or your tax-free bonds pay you interest every month. Any one of those can shove you over a line you never knew existed. 3 myths keep people from looking. Let's break them. Myth 1. Shame. If I owe, I must have filed something wrong. You filed fine. The line was frozen in 1983 so that inflation would do the catching. Not your guilt, not your pride, and not your math. Myth 2. Fear. If I move my savings, the IRS will flag me. Moving your own insured deposits between banks is generally not a taxable event and not a red flag. It's your money. They hold it, you direct it. Myth 3. Pride. I've done my own taxes for 50 years. I'd have seen it. The Social Security Benefits Worksheet is around 18 lines, buried in IRS Publication 915. It was not written to be seen. It was written to be correct. Quick case. Helen, 75, widowed, Tucson. Her advisor put her in municipal bonds. Tax-free, Helen. $6,000 a year of muni interest. On the worksheet, all $6,000 counts. It pushed about $3,000 of her benefits into taxable territory, roughly $36 a month every month for owning the tax-free investment. The brochure never mentioned the worksheet. The brochure was never going to mention the worksheet. Now the upgrade twist. The good news, they also won't mail you. For tax years 2025 through 2028, there's a new deduction, up to $6,000 per person 65 or older, $12,000 for a qualifying couple, on top of your regular standard deduction. You claim it on Schedule 1A. For many middle-income retirees, it can wipe out the very bill this worksheet creates. The honest footnotes. It generally phases out above $75,000 of income single, 150,000 married, and it expires after 2028, 4 tax years. The letter telling you to claim it does not exist. It was never going to exist. Still with me? Good, because knowing the machine is worth nothing until you run your own numbers. That's the next 5 minutes. 3 steps, tonight. Step 1. Pull last year's tax return and every 1099 INT the bank sent you. Run the 3 lines, other income plus tax-exempt interest plus half your Social Security. Compare it to your line, 25 or 32,000. Now you know exactly where you stand, which is more than anyone was ever going to tell you. Step 2. Call your bank. Ask for every account under your Social Security number, every CD renewal date, and the exact interest they'll report this year. Here's the stakes line. Every CD you let auto-renew is a vote to repeat this year's tax bill next year. Check first, renew second. Step 3. Pick your shield. If you'll owe, Form W-4V lets Social Security withhold tax from your monthly check. 7, 10, 12, or 22%, your choice. So April stops being an ambush, and there's generally no underpayment penalty nipping at you. And when you file, claim that $6,000 deduction on Schedule 1A. Both forms are free, both take minutes. If the worksheet or the forms feel like a wall, ask a son, daughter, or grandkid to sit with you. It's a great 15-minute favor, and it might be worth a few $100s a year. Do those 3 steps, and you're ahead of roughly half the country. But before you touch that tax return, remember I said about the $0 checkbox? We're there. And if you're married, do not file anything until you hear this. Everything I've told you assumed your line is $25,000 or $32,000. There's one group whose line is 0. Married filing separately, and you lived with your spouse at any point during the year. For you, the threshold isn't lowered, it's erased. Generally, up to 85% of your benefits can be taxable from the very first dollar of income. Not a phase-in, a trapdoor. Some couples file separately to keep finances tidy, separate returns, same kitchen table, and the IRS decides your tax-free allowance is $0.00. Romance, it turns out, is not deductible. Nobody broke a law here, you'd just be paying for not knowing theirs. One checkbox, filed in good faith, can cost a couple more than this entire video's worth of CDs would earn. If separate filing was ever suggested to you, that worksheet is the first thing to check, before the box gets ticked. Now, the part you've been waiting for, the exact words, pen and paper out. 2 calls. Call 1 is your bank. The number is on the back of your bank card or the top of your statement. Call mid-morning, Tuesday through Thursday, when the lines are shortest. Line 1. Force the full picture. Please read me every account under my Social Security number and the exact amount of interest you will report to the IRS on Form 1099 INT this year, including CDs that have not matured. Line 2. The strategy sentence. These are the magic words. On any CD with a term of 1 year or less, I want the interest credited at maturity, so I choose which tax year it lands in. Honest footnote. On CDs longer than 1 year, the interest generally must be reported annually no matter what. That's their rule, and it's printed in the deposit agreement they'll happily never read to you. The timing move works on the short ones, and short CDs are paying nearly the same as long ones right now. Line 3. Looking backward. If I missed a deduction or over-reported, I'll file Form 1040X. That's the amended return. You can generally go back 3 years. If you skipped the senior deduction or paid tax on benefits you didn't owe, that's your money, and the refund request is yours to make because no one is coming to make it for you. The defense line. If the rep says, "I can't see that," or "That's not something we do," don't argue. Say, "Then please transfer me to deposit operations or mail me my deposit agreement and a year-to-date interest summary. I'll hold." The rep reads from their script. This script is yours. Line 4. Always. Send me that in writing, paper or secure message, before anything renews. Call 2 if you want withholding from your Social Security check, Form W-4V. Download it at irs.gov or call Social Security at 1-800 772-1213. Best time? First thing in the morning, midweek, late in the month. And one rule for both calls. If an answer feels off, hang up politely, call again. 2 matching answers, then proceed. 3 mistakes to never make again. 1. Letting CDs auto-renew blind. Every blind renewal reorders this year's tax bill. 2. Buying tax-free bonds to beat a worksheet that counts them anyway. 3. Skipping a $6,000 deduction because no letter came. The letter was never coming. Remember Frank? Here's the ending I didn't tell you. The $1,400 from last year, gone. It was legally owed and no phone call brings it back. That's the honest part. But this year, Frank ran the 3-line math with his granddaughter at the kitchen table. He claimed the $6,000 deduction. His bill dropped to nearly nothing. He filed the W-4V so there's no April surprise left to spring. And he broke that $155,000 CD ladder into pieces with maturity dates he picked, on purpose, with the interest landing in years he chose. Same bank, same savings, same Social Security. The difference wasn't luck, a lawyer, or a loophole. It was 15 minutes of knowing what to ask. Tonight, the tax return, the 1099s, 3 lines of arithmetic. That's it. Then send this video to one person you know with a CD and a Social Security check. A widowed sister, a friend, an old coworker, the neighbor who just bragged about his new rate. You won't be sending a video. You'll be handing them a few $100s a year every year. And when you make your call, comment the word worksheet below. I read every one. See you in the next video.